First question is, you said that you noticed the speech by Mark Carney. Tell us what's your take on that.
Well, I think he articulated very well what a lot of people were feeling, and he said that the old law-based international order, which gave a lot of power to the middle countries, that is over, and we are in a period of great power rivalry, and that countries, particularly middle countries, can't be nostalgic about that. Nostalgia isn't a strategy. They have to come up with a strategy to deal with that. And I thought that was very refreshing and can now perhaps move the dialogue forward.
Yeah, so from your perspective, I mean, as an investor, do you think the geopolitical issue is the biggest risk facing this year?
I'm not sure that, directly say like armed conflict is the biggest risk. But I think that some of the trends that we've seen really for multiple years now, say gold and commodities as something of a move away from the dollar, which has come down in value. Trends like that, I think, are related to geopolitics, and I think they can persist.
Yeah. And we'd like to know, because like a Danish investment authority just decided to get rid of their U.S. debts. Do you think that signals some like a small but structural or long-term trend or change in the markets?
Well, in some ways, the U.S. is going to potentially be a victim of its own success because the U.S. has hoovered up so much global investment for the U.S. domestic economy, which was growing well and is growing well, and the tech investments. And I think at the margins, both private investors and public investors are looking at their U.S. exposure, which is perhaps higher than it has historically been. So I think those trends are there, and there's lots of examples that you can find about people rethinking that exposure. So there is a longer-term trend, but at the same time, there's really no alternative to the U.S. Treasury market in terms of its liquidity and depth, at least at this point.
Yeah, and you mentioned that there might be bubbles in the AI investment, but there's no AI bubble in those like Wall Street tech giants.
Well, we don't think they're in a bubble because, they still have free cash flow. They're spending a lot of it on AI CapEx, but, that's a world away from companies that have, aren't profitable, don't have free cash flow, and are reliant on the debt markets for their very existence. So I think we see some separation there.
Yeah. Lastly, tell us your outlook for Chinese economy.
We think the Chinese economy will deliver on stated goals, and we do see investors around the world, maybe not in the United States, but other places, rethinking and increasing their Chinese allocations, and we like Chinese tech, and we think that makes sense.
Yeah, can you elaborate a little bit on those Chinese tech stocks?
Well, I mean, I think that both the U.S. And the Chinese government have said they want to win the AI race at any cost. So we're looking for companies that can benefit from that. And, I often think about China seems to be using its AI to make its manufacturing capacity stronger and bigger. And in the U.S., it seems like a lot of the AI capacity is going towards teenagers having AI boyfriends and girlfriends. So that's something I worry about.